Well, hey there, everyone. It's Thursday. It's May 18th, 2023. We're doing a stock options stock market review. Once again, algorithm outdoing itself. I hit every single company that I played a call and a put on that I mentioned in the videos and that I also did on my own. Every single one. I think there was about 9 or 10 of them. Up $500 today. It was like 25% of the money I'd invested up today. Just really, really incredible stuff. So I'm going to talk about what this algorithm spits out and how you do further analysis on these companies to determine if buying a call and a put at the same strike price has value out to a certain expiration date based on how the companies move today and the price of their options and the spreads on their options. So what we're looking at is we're sorting everything by which companies moved up the most as a percentage of what it costs for their options. Here's what that means. Take-Two Interactive. Take-Two Interactive. I grabbed their option prices expiring a week from tomorrow, week from the 26th of May. They cost about $470. Today, they moved $15 up. I think they announced nice earnings or something. They made some announcement aftermarket yesterday. So they jumped a lot. They just need to move about $5 in either direction from now until the 26th. When you have a big move like this, a lot of times the company will move again as a proportion of this. Maybe they'll drop by $5 or something tomorrow because they just went up a ton. Something like that might happen. Maybe they'll keep going up because their numbers are really great. Either way, there's usually something that happens when there's a lot of activity here over the next few days as people try to take profits. So this is a pretty good one. This is one to buy. Only, you're 3 times the amount it has to move. It moved today. So not that expensive. That's a pretty good one. Netflix. I didn't search Netflix option prices, but they moved a ton today, $30. That's twice as much as they needed to move on these options here. I think I did grab those options pretty recently. So still pretty expensive here. Not as good because this is pretty expensive at almost $1,500 to buy a 1-week option. So let me just talk about how we scroll and how we find companies in here. And also let's talk about C Limited, for example. I was talking about C Limited earlier this week, and they had a day where they dropped about $15 a share. Well, guess what happened today? They did what they needed to do. They dropped a couple bucks. At a certain point, they were down almost $3. I made money on this. I bought a couple options for about $200 and sold them for $250. So, making 20%. It's just 25%. So it's just really predictable. These look at Procter and Gamble. P&G did the same thing, down by $3 to leave $329 for their options. Talked about that earlier this week. Good for them. Just amazing how reliable this can be. So some other companies I want to talk about that have been fantastic for this week, which is Advanced Micro Devices, AMD. It's been an excellent company for doing this. You can see their option prices have actually moved up a little bit because they've been so active recently. But once again, today, moving $4 today, almost as much as they need to move to cover the entirety of next week. They're just all over the place. They were down at $90, $95 a share. Now they're at 107 within the week. They're just really moving, and there's heavy volatility. Excellent company for doing this. Even though their options are catching up and getting a little expensive, there was times earlier in the week when it wasn't predicted that they were going to move this much, and these options were cheaper. So you can see that great spread range, that they're always available to buy and sell at a very defined price. And while they need to move 5%, this company has been moving. So it's been very good for that. Let's take a look at companies that lost ground today. See if there's anything in there. So companies that lost ground, TTWO Holdings, don't know what this one's about. Boot Barn, a little expensive and the spread range is bad, but General Mills, super cheap. They move $1.70. Their options only cost about $128 yesterday. Just T-Mobile, another one I discussed. Not that bad. Not that bad for next week. They move $1.54 today. They move $4.06 today. They move more than they need to move all next week just today. Really, really solid company for doing this. And we are hitting every single company. It is not like, it's really incredible. Let's sort this in another way. Let's sort this by, let's say, break even boom number is what we're going to sort by, ascending. So what this does is this tells you the companies that have to move the smallest amount percentage wise. And we're also taking a look at how much they move. So what we want to see here is we want to see a big number in this column, a big movement, and a really low number here and a really low cost. Chipotle is pretty expensive at 2,500. So even though they moved a lot, they're really expensive. What about General Mills? That shows you how good General Mills was. They dropped by $1.70 and their options were really inexpensive. Philip Morris, not bad either. Let's see, what else do we have here? Looking for a bigger number over here. What about this? Humana. Humana drops by $7 today. The options cost $800, but they did drop by $7 today, and they're pretty high. So this is not that expensive given how high a share price Humana has. Bristol Myers Squibb, but that's a lower price company with smaller movements. CSX, but they're really cheap. Booking Holdings, really expensive, but they moved $8,000 in intrinsic option value. Only cost $4,700 to buy an option. The options on them, that's like $3 grand, over $3 grand you could have made on that one. Once again, IBM continuing to go up. IBM was profitable this week. That was one that the algorithm did recommend. It's really just updating this and pouring through this sheet every day to find the value. And until we start missing things, and until all of a sudden these companies stop moving completely or something, which I don't expect to have happen, you can expect to see continued success here. It's one thing to get a few of them right. It's another thing to get all of them right. And that is what has been happening. You're not asking for anything all that unrealistic, just normal fluctuations in a company's price, and anything more than a little normal fluctuation results in extra profit for you because you have them in a range that's further away from their strike price, and you have both a call and a put. So you sell one of them for the cost of both of them, and that's how you profit. So I'm really enjoying it. I'll be back tomorrow to do a review and kind of explain all the companies I have. I have a ton. I'm going to read out to you the companies I have. You won't see them on the screen, but I'm going to read them out because I'm into, I guess, 9 or 10 companies. JP Morgan, Oracle, Advanced Micro Devices, AMD, Procter & Gamble, PG, Waste Management Company, WM, Take-Two Interactive, TTWO, T-Mobile, TMUS, Kraft Heinz, KHC. That's a real cheap one, but I do have that one. MU, I can't remember what the name of the company is. Wells Fargo, WFC, and Delta, DAL. Those are the ones that I grabbed for next week that showed promise as I was reviewing the file yesterday and today. So we'll see how those companies do for next week, but this does just change every time we update and refresh in live action. Western Digital made money today. Look at that. They went up $1.82. I made money on that one. Just every single thing this week. I made money with Western Digital, with Tapestry, with Marvel. It's just like every single thing fluctuated enough that they were all able to make profits. So definitely a really interesting strategy, and we'll keep it up, and I'll keep doing more analysis and querying more stock option prices for specific dates so that we can have more accurate comparisons about what the expiration dates on the options are, and a bit more reliable prices as well. So keep on keeping on. If you're following this and you're starting to enact some of the intelligence from this, let me know. I will answer questions and do analysis of certain companies. If you'd like me to do a more current analysis on any of the companies that are on the exchange that offer options, let me know. I will do that and tell you whether or not the algorithm thinks it's a good pick, a mediocre pick, or a bad pick. Because you do have to look at multiple factors: cost of the options, the amount of movement today, what the break-even percentage change has to be, and what the spread range is. Low spread range, low break-even, high number here, or a high absolute value, meaning a big gain or a big loss, and low cost of options. That's the 4-factor quadrifecta. What is it? It's exacta, perfecta, I don't know what a quadruple is, but you need to get all four of those. And when all four of those are pointing in the right direction, then that's a sign to buy. All right. Good luck, everyone. I hope all your trades are continuing to be volatile and profitable for you.